Both the European currency and the British pound resumed their downtrend against the US dollar. It comes as no surprise as the economies are experiencing a slowdown. The US Federal Reserve maintains its aggressive policy tightening path to respond to surging inflation. The global economy is increasingly at risk of sliding into recession. Geopolitical turmoil adds to worries in the market and dampens risk appetite. All this leads to another sell-off and fresh one-year lows. Yesterday, the United States released data on consumer confidence. The index rose above analysts' forecasts, which boosted demand for the greenback. The rise in confidence indicates growing optimism in the economy. Apparently, consumers believe that the US Central Bank will be able to get control of inflation. Today's macroeconomic calendar is full of speeches by ECB and Fed members, including President of European Central Bank Christine Lagarde and Federal Reserve Chair Jerome Powell. Obviously, they will continue to push for further rate increases in order to cool price pressures. Thus, the US dollar is expected to extend gains. Besides, it's worth paying attention to the GfK German Consumer Climate Index. The indicator is forecast to come in well below expectations, which will exert stronger pressure on the euro. In the second half of the day, the US is set to report statistics on pending home sales. Yesterday's data showed that new home sales in the United States unexpectedly increased. Nevertheless, a sharp drop in home prices indicates a looming recession and fragile economic state. Furthermore, traders may take notice of US goods trade balance and retail inventories excluding autos. However, these reports will hardly have a severe impact on market sentiment. The focus of investors will be on ECB and Fed members' speech. From a technical point of view, the one-hour chart shows that the euro-dollar pair has hit a new one-year low, falling below 0.9556. Thus, the euro is likely to head for 0.9509 and 0.9458. A failed attempt to return to 0.9556 and a false breakout at this level, following downbeat statistics from Germany, will create a sell signal. In this case, the European currency will slide to 0.9509 and then to 0.9458. At the mark of 0.9458, it will be possible to go long on a rebound with a view to catching an intraday correction of 30-35 pips. Long positions against the trend at 0.9509 can be considered only amid a false breakout. If bulls are able to regain control of 0.9556, its top-down test may create a buy signal and result in an upward correction to 0.9598. In this area, I think bears will take the lead again. A false breakout at 0.9598 will lead to an increase in the volume of short positions. Alternatively, it would be a wise decision to go short on a rebound at 0.9647, counting on an intraday correction of 30 to 35 pips. Although the British pound slid to 1.0633 in the Asian session, the currency seems to be recovering from its heavy losses posted on Monday. Short positions will be relevant in the event of a false breakout at 1.0704 and 1.0766. Alternatively, traders may go short on a rebound at the upper boundary of the corrective channel 1.0835, counting on a decline by 40 to 45 pips. According to analysts, there is now a 20% chance of the volatile pound hitting parity with the US dollar. Therefore, if the price breaks below 1.0633 and tests this level from the bottom up, another sell signal will be generated. In this case, the British currency is expected to dip to 1.0572, 1.0527, and probably to 1.0473. However, it's not worth rushing to buy the pair at these levels. Long positions can be considered only amid a false breakout at 1.0572 and 1.0527 or on a rebound at 1.0473 with a view to catching an intraday correction of 40 to 45 pips. If bulls are able to protect 1.0633 or the price stays firm around 1.0704, a buy signal will come. Thus, the pound sterling will advance to 1.0766 and 1.0835, where it is likely to get stuck in a sideways range. Good luck!